Okay, I see the recording has started. So good afternoon or good morning, everybody, or good evening, depending on where you're joining us from. My name is Candace McPhillips, and I'm the current Chief Financial Officer of the Council for Military Spouse Clubs. Today, we've got quite a few members of the council in this webinar, and most importantly, we have our guest speaker, Sasha Lightfoot, who will be taking us through some tips for treasurers for spouse clubs, especially at the beginning of the spouse club year and things to keep track of. So I'm going to give a short introduction of Sasha and then turn it over to her to start the presentation and also to add anything to her bio that I may forget as I go through this brief introduction. So Sasha is currently in Fairfax Station, Virginia. She's a Marine Corps spouse, and she has 25 years of combined experience in banking, accounting, bookkeeping, and also property management industry. So a wide range of experience, much of which is extremely relevant to military spouse clubs. As I mentioned, she's a military, a Marine Corps spouse, an active duty Marine Corps, and has served in a number of different roles, as her time as a military spouse. So she's been family readiness advisor, family readiness assistant, a LINKS volunteer. She was recently, back in 2014, the lead coordinator for what's called the Cornerstone course, which we have in the Marine Corps, which the Commandant puts on for all spouses and, of course, active duty members who are in a command role. So that's quite a big job to be a lead coordinator for that course for the year. She has been an advisor to a spouse club here in Hawaii, which is where I'm talking to you from today. I currently live. She's been parliamentarian of the Marine Officer Spouses Club of DC, where she's also currently a member. And she, importantly, created her own bookkeeping and consulting business called Argent Advisor. So she helps a lot of small business clients navigate, accounting, bookkeeping, and financial issues. She also created a Facebook group that many of you might be familiar with called Military Landlords, which has 22,500 members and growing, I'm sure, by the day. So she administers that. And then she's currently, as I mentioned, a member of the Marine Officer Spouses Club of DC and the Marine Aviation Spouses Club. Yes, as a pilot's wife myself. So Sasha, I'll turn it over to you to add to anything I might have missed and to go ahead and start the presentation.
Awesome. Thank you, Candace, and thank you for inviting me here. I'm one of those people that actually gets jazzed about talking about bookkeeping and accounting, and I know that's maybe a little bit of a sickness and might make some people break out in hives because money is scary sometimes, especially if you're managing it for other people. However, it is something that I find enjoyable, and I think that anyone truly can find enjoyable when you're in a spouses club, especially because it's a position that a lot of people find to be scary, and it's often hard to find someone who wants to be the treasurer of a club because they're afraid they might make a mistake or not know how to be a good accountant or a bookkeeper or what have you. And I'm here to tell you that you don't have to come from a bookkeeping background to keep the books for a small or even medium-sized nonprofit. In addition to spouses clubs, I've worked with different booster clubs and things like that, and they all work fairly similarly. And, when you're working with a team, you have a board. So you do have, checks and balances in place. So while as a treasurer, you may be the person responsible for putting together the financials or helping the board make decisions, you also have other members who are working with you to make, those decisions, or to make sure that you reconcile things the correct way, or you're putting funds where they need to go and things like that. So being the treasurer first off does not need to be scary. There are a few things that you need to keep in mind. Who here is a treasurer right now, or who has ever been a treasurer, or who is going to be a treasurer coming up? So I think I can see a few people. Okay. All right. And I know they have everyone muted. I'm I like to chat, so sorry. Okay, so we have some people that have experience as a treasurer. So hopefully when we come to a segment for questions, you feel free to share your experiences, the good, the bad, the ugly, or what have you. So I'm going to share just my screen so that you can see what we're going to talk about today. I figured that we might talk about the basics. So when I say basics, I mean you're new to the position of a treasurer, or perhaps even you've been a treasurer on the board for some time, but you need to make sure that you have all your ducks in a row. So for example, I might start with number one, verify last year's taxes were filed. You could do this by calling your organization's CPA. You can also check online. So there is a website that should work. Well, let me unshare real quick. Maybe it won't work when I'm sharing. Give me 1 second. All right, it doesn't like to link when I'm sharing, which is a little strange, but we'll carry on. So the first thing that you can do is either check to make sure that your previous year's taxes were filed by going to the tax exempt organization search. So your organization will have an employer identification number, or you can search by organization name. I can tell you that searching by the employer identification number is a lot easier. You can also use this tool if perhaps you're getting a donation from someone and they want to verify that you are a legitimate nonprofit organization. They can look you up on here. You can look up anyone. So for example, I can look up this club and I can see their name. I can see their tax ID number. I can see all of the taxes that they have filed for the different tax periods. So if you're new to your position or you're new on the board as a treasurer, you might want to pull up your organization and see that they filed last year's taxes. You can also call the CPA if you want to do that as well. This is also a place where you can find well, we'll talk about that in a minute. Does anyone have any questions about this so far? Because I don't know how in depth to talk about this or how not in depth to talk about this. Okay. So
I'll ask a question that do you have to be a 501c3 in order to show up on there? Could you be any nonprofit? What will show up on that tax record?
Any organization should show up that has tax exemption eligibility through the IRS, and the IRS can give, to your point, many different types of 501c4, there's many different tax exemption buckets, if you will. So any tax exempt organization should show up on here. Something that I might mention is when you're talking about when you're going to file your taxes, you might want to make sure that when you are filing your taxes, your due date for taxes are somewhat aligned with when your board is going to turn over. It may not be, it's not mandatory by any stretch, but like, for example, I was serving on a club and their fiscal year end was a month after their new board was installed. Well, as most of us know, when you're your first month on a new board, you're sorting out a lot of different things, whether it be welcome events, for kicking off the season, just getting acquainted with your governing documents. There is a way that if you have what I would refer to as like misaligned fiscal year end for your club, and when your new board is installed, your CPA can help you file a form to change your club's fiscal year end to better align with your board's installation. So that's just something maybe to keep in mind, is finding out, well, when do you install a new board and when are your taxes due? And does that date make sense? Because you don't want to be the new treasurer having to file the taxes for all the previous year's activity. It will be very hard to answer questions. Okay. Then what else I would point out? Sorry for the screen sharing. It's a little off. Now it's going away. Give me 1 second. If there aren't any questions about that part, then I'm just going to skip on to number 2. It's hard for me to tell if there are questions. So I guess Tim or Tracy, someone can cut in if there are.
We'll let you know.
Thank you. All right. So the next thing that as a treasurer or even a new board member, you're going to want to make sure of is that your club has what is referred to as IRS eligibility of exemption, meaning someone in the club's past has filed with the IRS to be eligible to be accept donations or be a nonprofit and file taxes in that way. Now, the IRS exemption determination letter is the really long name of it. Your club should have an actual paper copy. This is like gold for clubs that were created before 2014. It's much harder to get a copy of this eligibility or determination letter if your club was established before 2014. If you don't have it, you can get it. You would need to complete an IRS form 4506-B, and you can request that copy. If your club was established and received eligibility for nonprofit status after 2014, you can get that letter from the website that's listed here in number 1, the tax exempt website. It will show up not only the taxes, but also the letter of the IRS exemption determination letter will show up there as well. That's only for clubs. It will only show up online if your club was after 2014. If your club is before 2014, well, you're going to have to write to the IRS and get a copy, which could take some time. Let me show you an example or a sample of what this letter is that I'm talking about. It's very easy to skim through a binder or whatever kind of document you may have received with your turnover and miss this letter. But this letter is extremely important. So this is a sample that I pulled from the IRS sample. This is no personal information being given out here, but it will have the date that you were approved, your employer identification number, the name of your organization, and then I think, Tracy, you had mentioned there's different types of nonprofits. It will list exactly what type of nonprofit you are. So for example, in paragraph 2, it says that this exemption is for 501c3, and it should or may even give more information for what you are allowed to do with that, that designation. For example, I've seen some that you're only allowed to operate in a certain county with that designation. So this is a very important document to have. Sometimes you may need this if you are filing for additional nonprofit status within your state. So the state may ask you for your certificate of eligibility or your IRS exemption determination letter. This is what they're talking about. So when I say this is like gold, you need to keep, in this day and age, an electronic file of it somewhere so that it can easily be passed on. Because you don't know what you might need it for down the road. I know, for example, we needed it here in Virginia to be able to host a bingo because the state wanted to make sure that we were a legitimate nonprofit organization, but we were established before 2014. So thankfully, we had this letter that we could give to them. So that is the long and short of that determination letter. And I've been in an organization where it was lost to somewhere and it does take a bit of time to get. So I recommend finding out if you have it sooner rather than later, just so you can get on that, because it's not easy to call up the IRS and they're not just going to fax it to you. You're going to have to send a request and it will take months to get. So don't wait till you need it to go looking for it, is my point. I took some notes, so sorry that I have darty eyes. I'm looking over here at my notes to make sure I don't leave anything off for that. Are there any questions so far? Or has anyone come into a situation where you needed a determination letter, or you entered a club and they hadn't filed the taxes and you needed to see if they'd filed the taxes, or get a copy of the previous year's taxes?
Sasha, I had something to add to that too, that I've run into with some spouses clubs where their board has, of course, changed over, sometimes multiple times since they filed for IRS tax exempt status. And so when the spouses club treasurer or president tries to obtain a copy of their determination letter from the IRS, or any information from the IRS rejects it, saying that they are not the responsible party listed in their files to be able to access that letter. This is all assuming that you can't access it on the website, which is the easiest way. So there is a form, and I can dig up the number and put it in the chat. There's a form you can file to change your responsible party, which should be, your president or your treasurer. And then that person can be the designated point of contact with the IRS. And I know we had talked earlier, just to respond to this question about the doing business as. There is a doing business as designation on the, for instance, the Form 990 for the annual returns, but I don't know the answer to the question about being able to access the letter. I assume you would be able to tell the IRS, this is the prior name of our organization, or the current name officially, and then we're doing business as this other name, and they would give you the same access as long as you're the responsible party, if it's not already online posted.
Yeah, I would love to have the name of that responsible party form, because
Yeah,
that I'm sure happens more times than not.
Yeah.
Does anyone else have any experience either on a board and needing these documents, or just any questions in general? So we're good to move on?
I think we're
All
good.
right. We kind of already talked about number 3 here that I have, which is identifying the club's fiscal accounting period, and does it align with the installation of the incoming board? I only put this on here as its own number because it's actually happened before where this wasn't aligned and it caused some problems. So the way that you can identify your club's fiscal accounting period is either through the website listed in number 1, and or checking with your CPA, or it may even be listed in your it could be listed in your governing docs or past documents or past filed taxes. So I think I kind of already explained why that's important. You don't want to ever leave as a treasurer. When you leave your position as the outgoing treasurer, you don't ever really want to leave any loose ends. Because if the CPA or someone has questions, it's okay if it's a week or 2 later, but if it's 2 and 3 months later, it might be harder for you to not only access that information, but be able to give a good answer to help the CPA finish out the taxes. And you certainly don't want to put the burden on the incoming treasurer to answer questions for things that happened in previous years, if it can be helped. So that's why I put that as its very own number 3. I would also say, when we're talking about the CPA, You know, a CPA, first off, I'm not a CPA. I do not want to know about the ever-changing tax laws. That is not something I like to try to keep track of myself. So I say team up with a CPA. Usually I say CPA all the way, because they are really going to be the person who can help you answer maybe decisions that you're looking to make, what tax implications they may have for either purchasing, selling something, or how you set up your books, which we can talk a little bit about that. I say talk to your CPA and ask them, what's the best way for me to transmit my club's information to you? Some people may be really skilled with QuickBooks. Some people may be Excel wizards. Sometimes the CPA will give a club a set of Excel workbooks or give a club a template to use to submit their information come tax time. And I can tell you, at least from the CPAs I've ever worked with in my line of work, if you use the templates that they provide you, it takes them far less time to calculate your taxes, and find information. So there's less back and forth with them asking you questions or you asking them questions, because you've put it in a way that they in the language that they speak, so to speak. I'm a big proponent of QuickBooks Online. I know that's not every club's cup of tea. I know that makes some people, want to break out in hives. But it is a really useful tool to help communicate between your bank and your CPA. And it's really easy to print financial reports from. It's easy to do reconciliation. It's easy to hand off to the next person. And oftentimes your CPA can offer your club a discount subscription because they have that ability, because most CPAs use QuickBooks in some capacity, either with some clients or for all of their clients. So if your club doesn't currently have QuickBooks and it's something you're interested in, vice going out in the market, you may want to ask your CPA if they can offer you a discounted membership. And sometimes those memberships are very beneficial. They're very, very good discounts. Let's see. Okay, chats are popping up, so I'm just making sure. Oh, yeah. So yes, many CPAs do offer discounted services to nonprofits. So it's definitely worth the money because, I did kind of allude in the beginning that no one ever really wants to be the treasurer. However, if you have a CPA working with you, it kind of takes a little bit of the scary out, because you have someone that you can reach out to and ask for advice. So get a CPA, which your club should have. And I would also say, which I think we might talk about in a little bit, or maybe we don't, but state taxes. So many clubs require you to file not only federal taxes, but also state taxes. So if you can find a CPA that's not only knowledgeable on nonprofits, they'll also be knowledgeable on your specific state's tax return requirements, which is very helpful. For example, I had never seen anything like what I saw when we lived in Hawaii. Like what the state requires for their taxes was new and different to our club and to the people who were on our board at the time. But our CPA was they actually provided us with templates to fill in our data and then submit back to them. So filing that state income, the state income tax was a lot easier. And it was also due on a different, it was not due annually, it was due on a different timeline. So the CPA was also able to help us stay on track with that. The next item, or I guess I should ask, does anyone have any questions about that? Or experiences that they want to share? I'm very much a chatter, so if people want to chat, that's cool.
The other thing, Sasha, maybe this will spur some questions too, is I know a lot of spouse clubs I've been involved with in the past actually have independent contractors or full-time employees, especially if they're running a thrift shop or a gift shop. And so, from the standpoint of, all the federal and state payroll and tax filing requirements that come with having independent contractors and employees, the penalties for not following those requirements can be quite severe. And the IRS and the states all collaborate in a big information sharing, practice all the time. So if you issue, your 1099 forms, whatever for W-9, whatever for independent contractors or employees, they are going to be able to track back to your club and see that you have paid people, and then they're going to look for your, federal tax filings, on the payroll side, and if they're not existing, then that's going to be a problem.
Yeah, and I mean, to that point, I mean, I own a bookkeeping business and I've done bookkeeping. Guess what I don't do? I will not calculate payroll. I want no part of it because the states change requirements all the time and it's not something that I can keep track of. But guess who can keep track of it? Payroll companies and CPAs. That's what they do. So yeah, to your point, I think our number 4 that we're going to talk about is W-9s, but especially if you're a thrift store or you have employees that you're in charge of, the treasurer on the club wants no part of calculating payroll. So yeah, I wholeheartedly agree with that. I mean, I live by that mantra. Was there anything else?
So Sasha, you recommend clubs that do have people who are on 1099s and contractors that they outsource anything having to do with their pay and subscribe to some other service, third party?
Yeah, I think if you're going to be a contractor in the true sense, but I think also to Candace's point, there are very specific rules to what makes someone a contractor and what makes someone an employee. And they're sometimes blurred a little bit, and that can get you into a lot of trouble. So maybe the CPA would be someone who you could reach out to run criteria. Is this person who I'm paying based on what they're doing for me and what they do for other individuals or companies, would they be considered, a 1099 or an employee? Because the IRS has very specific rules for what delineates the two of those positions, and they don't mess around. So a CPA you could ask, or if you know that you have employees, like in the example of the thrift shop, if you know you have employees and you're going to need to do W-2s, I suggest hiring a payroll company. I mean, that's what I tell my small business clients is, I don't calculate payroll because there's so many nuances to it and so many moving parts and laws that change and things that change. And that's why there's Paychex and there's ADP and there's QuickBooks offers payroll even. Your CPA may have a bookkeeper that can do your payroll because many times CPAs have in-house bookkeepers. You'll pay for it, but you're going to pay for that anyway. You're going to pay for that whether you use your CPA's bookkeeper or an online service or ADP or Paychex. But it also takes a little bit of the pressure, not only the pressure off of you, but a little bit of the liability, because I mean, you outsource it to an expert. So what more could you do as a treasurer of a club than outsource it to an expert? Yeah, payroll is definitely not a requirement that I would put under the charge of personally calculating to a board or a treasurer.
Good advice.
I love numbers and I love bookkeeping. Payroll makes me sweat. Okay, that would make me have hives. So the next thing, which kind of segues in, we were going to talk about getting a W-9 from any independent contractors for processing 1099s. So maybe we'll just stop here and talk about what is a W-9 and what is an independent contractor and what is an employee. Like I just kind of alluded to, the IRS has some very specific rules that outline what these people do. For example, as a business owner, I can receive a 1099. I'm in charge of paying my own taxes, both the employer share and in the employee share, because I offer my services independently to various different companies. I don't spend like a bulk of time with one company and then have just a side gig. Like my whole business is a bunch of different companies. And they can outsource that work to me. Now, a W-2 is considered an employee, meaning they only really work for you. They may have like a side hustle or something else they do, but they're under your guidance. They use your equipment. The bulk of their time is spent with you. Again, I'm not an expert on this. The IRS has many different reasons why someone might be a contractor and why someone might be an employee. An employee, the employer has to pay a portion of their taxes. So like a thrift store is a good example for, you know, someone actually comes in, they clock in, they are working there using all of the thrift store's register, the thrift store's inventory, invoices, like the whole structure belongs to the thrift store. Someone like me as a bookkeeper might go to the thrift store as one of my many clients and help the thrift store balance their bank for the month. And then I might go on to my next client and help that client balance their bank for the month. As that independent bookkeeper that comes in that one time a month to do the reconciliation, I would be required to fill out a W-9 from that thrift store, meaning the thrift store isn't going to pay any portion of my income taxes or Social Security or FICA, all that stuff. I'm going to have to pay for that all on my own. And where this gets to be important, to what Candace talked about earlier, that thrift store at the end of the year is going to submit 1099s not only to the independent contractors and W-2s to the employees, they're also going to transmit all of that information to the IRS at the federal level and possibly the state tax authorities at the state level. So that way, when I, as the independent contractor, go to file my taxes, they'll be able to, or the IRS already knows how much I got paid from all of the different companies. So then I have to record how much money I made. So you, as the treasurer of the club, may be required to ask your CPA or differentiate between who might need to be a W-2 and who might need to be a W-9 vendor. So I kind of gave one example, but let me show you what the form looks like. And some of you may own your own businesses and you're very familiar with this. I would just say that as the treasurer of a spouses club, you'll want to make sure that any vendors that you're using that aren't employees of your club or your thrift store or whatever entity you may be running as a spouses club, any independent contractors, you can give them this form. It's just a W-9 and it's a request for taxpayer identification number and certification. So the person, I'm just going to stick with the bookkeeper at the thrift store example because I feel like that's probably not far off from maybe an example, a real life example that might happen. You would give this to that bookkeeper that comes in once a month and they would fill out their name, their address, they'd fill out their social security number or their employer identification number, they'd sign it and date it and they'd give it back to you and you would keep it on file. Now, depending on what type of software you use for your accounting, for example, QuickBooks, I can go in and I can input, once I get a W-9 back, I can input a contractor's name, address, what type of entity they are, if they're an individual, a sole proprietor, or an LLC, or a corporation, or a partnership, and I can enter their tax identification number. And that's what I'm going to use, or what I'm going to submit to my CPA at the end of the year to use to send 1099s to all of my contractors. Now, it can be a little bit tricky to know when you're just looking at a list of vendors who might be eligible or who might be required to complete a W-9 as an independent contractor. Most of the time, it's a little hard to say, but most of the time, corporations don't need to fill out a W-9. Any sole proprietor has to fill out a W-9, and some LLCs have to fill out a W-9. I don't know. It's always been my idea that you send them to who you think should fill them out, and hopefully they know if they're supposed to fill them out. Another example might be like if your spouse's club is having an event and you hire a DJ. Okay, well, is the DJ from some big corporation? Is the DJ, DJ Smash, and they do this as a side gig? Well, if it's DJ Smash, then they need to fill out a W-9. Even if it's DJ Smash LLC, they may need to fill out a W-9, because not all LLCs file taxes as corporations. In fact, many of them fill out taxes as a sole proprietor. You don't need to worry about that. When in doubt, send the W-9 out, because the person should know if they need to fill it out or not. And if they don't, you can have record that you sent it to them to try to get the information. So things like what I put, entertainment, maybe a catering company. If you're hosting a kickoff event and you hire a catering company, and you're going to pay them for their services, they may require a W-9. I'm looking on my notes here. Those were the main things that like instantly came to mind for an independent contractor, and when your club might need to fill out a W-9. If you're using QuickBooks, it's very simple to input this information. I don't get money from QuickBooks, so please don't take that as some sort of sales pitch. It's just a very widely used accounting software, a very widely used accounting platform. So I reference it a lot because it's probably one of the most popular ones. Let's just say your club is all about Excel or paper or good old-fashioned way of keeping books. You could still keep these as an electronic record. You could keep them all in a binder if you want. I think we're mostly to the era where we're getting away from paper. So you could keep these stored in a Google Drive or something, and at the end of the year, pass it over to your CPA and say, here's all the people we paid. You'll see them on our financials for what amount we paid them for. It has all of their tax identification information, their mailing information, and please send out the 1099s. And that's it. That's what you would do as the treasurer for independent contractors. Does anyone have any questions about that, or scenario where you ran into needing that, or maybe even just in your regular everyday life?
I can chime. I may be naive, but I don't think all the clubs I've been in, I don't ever remember doing 1099s for, services that we were paying for. So like, for an example, you have an event where you have a catering to supply the food for everybody, but you charge your guests $20 to attend the event. Is that still, you're paying for that caterer for the service? Is that still something that should be filed? We should be giving a 1099 that's a contracted service?
Yes.
Because I think that many clubs I've been a part of, we just pay, give the money and then go on to the next event. So I don't know if everybody is aware that we should be doing this.
And that's a good point. So like, it's what you're paying the vendor. It has nothing to do with if you charge. So like if you paid the caterer $100 a head, but each person pitched in $50, you still would 1099 for the total amount of money that you paid the caterer. It will be $100 that you paid the caterer, because the caterer needs to account for their income, and they need to pay the taxes on their income. So basically the IRS has come up with the perfect way for all of us to keep track of who's paying who. You don't want to get dinged with it, because then if the catering what could happen? I mean, I don't know. What could happen is if the catering company says, oh, I received this amount of money from this spouse's club, and then the IRS goes to that spouse's club and is like, well, why didn't you file 1099s for that? Well, then there you have a problem. So Yes, but you know, you don't have to file for every person that you pay. They need to, and I think Candace put up, oh no, that was employee versus independent contractor. Yeah, you can go and look and see who might qualify for a 1099. Like I just shared the form with you. There's a whole like instruction packet that goes with that specific form. So if you want to read through it, and you can kind of get better acquainted with who you might need to give a W-9 to. I think the most tricky one that comes up are LLCs, because you don't really know how LLC files their taxes. Sometimes the LLC doesn't always know how they file their taxes. So when in doubt, just get it. You can't go wrong getting the information and filing the 1099. And if they don't need it, they don't need it. So any other comments or questions about independent contractor versus maybe employee?
I just posted the link, Sasha, to about the 1099. I think generally, right, the threshold is, I think, $600 a year.
Yeah.
That can add up, pretty quickly, where, it's best to, like you have said, be on the safe side and go ahead and get the W-9 and be prepared, to send the 1099 at the end of the year.
And that's what I do, like for my clients, even though they're not nonprofit. I mean, W-9s are for everyone, not just nonprofits. But if I notice that they're paying a new vendor, my first question to them is, well, what type of entity are they? And even if their first, bill is $45, well, I still go ahead at that point and collect the W-9 if they're going to continue to have a relationship with that vendor, because then at the end of the year or the end of the fiscal year, I'm not scrambling to get all the documents. And I've kept track of how much we've paid that person every time we've paid them. So it will accumulate, and sometimes it accumulates very quickly. So it's my practice to just get a W-9 the first time I enter any new vendor, because then you just can't go really wrong. Anyone else have a question or concern? No? All right. Well, this is the part where, we alluded to being the treasurer is not scary. I've talked about QuickBooks Online, like I make money from them, which I don't. We've talked about like paper and pencil way. Hopefully, I don't know if everyone knows how to balance a checkbook, like with the check register and what your balance is and how much money came out and how much money you put in and making sure it matches to the bank statement. At the end of the day, not to make it sound really simple, but that's what the treasurer does. So the treasurer looks at the balance, takes in all the money, accounts for all the money that went out, and provides financials for the board so that they can make decisions. Maybe it's decisions for how much money do we have to spend for a certain event, or how much money do we have to give to charitable organizations. Like I know some spouses clubs, they do their events throughout the year, and then they like to set aside a certain amount of fundraising money to then give back to their community. So the only way that you can be successful in that is with proper record keeping or bookkeeping. So again, depends on how you want to keep track of your money for your club. There are many different ways, but we will talk about number 5. Uh-oh. I don't know if y'all can hear me.
We can hear you, Sasha.
All right, well, my screen's we just have a thunderstorm and thunder just struck and the lights flickered. So I'm just going to continue on. Number 5 is monthly reconciliation and reporting. So as the treasurer, it's your job to take those bank statements and all of the activity that's happened in the bank and account for each transaction. You want to do a little bit more than maybe you do on your personal check register, or however you keep track of your monthly budget, because the club may want to know exactly how much money they've spent on certain things. Like maybe you want to see the success of an event. So like Tracy kind of talked about an event where the club charged a certain amount for people to come to a catered event. So the club might want to keep track of, well, we collected all of, the certain amount of income from our members, right, for this event, and we paid our vendors this, this other amount. Did we make any money off of that event? Would that be an event worth having again? Was it, was the juice worth the squeeze? Do we need to charge our members more to make a little bit of more money towards fundraising? Do we need to find different vendors to lower the expenses so that our net is a little bit more? I have a sample spreadsheet that I'm going to share. It can look really scary at first, but I promise that it's not. If you use QuickBooks can do financial reports, and I like them. You can set a budget up in QuickBooks, which is helpful. However, with all of that said, I still like a spreadsheet like this simply because I feel like it is easier to understand, although it's really scary at first, than some of the financials that just print out. So we'll start at the top, and it's broken out with income, and income is in green because green is good, green is a go, and expenses are in red. Red means, red, money out. So for example, your budget would go here in column E, where the club thinks that it's going to bring income of $4,000 for the year in dues. Then as you're reconciling, whether in QuickBooks or a spreadsheet, how much money comes in for dues? And you can keep track. Are we on budget? Or, wow, okay, we thought we were going to get $4,000 in dues by this point, but we're only at about $2,000 in dues. So we are below our budgeted amount by $2,000. Then carrying over on the same line item. So the same thing for dues. You may have said, well, when a new member joins, we're going to give them a keychain or whatever. I don't know, making something up. Well, with those dues or that membership due, we're also going to have the keychain expense that's tied to it. So I think we're going to spend $145 on these keychains. Oh, isn't that great? The keychains only cost $58. So we're doing good with, a net of $86. So long story short, you could go in and you could fill in for your different fundraisers that you're doing. So these are just, did not mean to do that. These are just some examples where, you can set your budget. So for kickoff, our club thinks we're going to make $1,200, but we also know we're going to spend $1,200. So obviously this is an event we're not really looking to make money on. We're just looking maybe not to lose money on. And then at the end, or as the event is being planned, you can say, are we on target? And then what is our net? Like for this one, I know that I need to be at 0. If I spend more money, I need to figure out, well, why did I spend more money? Then this particular example has things that they do for fundraising and things that they do just for their members. So some clubs may have a designation between the two. So like, down here, there is no budget there's no income that they're looking for from these certain events, right? And there may or may not be an expense associated with them. And they may not be as concerned with if they made money. Now, I'm pretty sure no club wants to lose money on a membership event, but this might be the area where they're not as concerned if they make money. Whereas up here in the fundraisers, that may be where they're really looking to make their money for the year. And this can change with every board, right? Because, the current board may have fundraiser ideas that they want to try or social events that they want to try. And these can be modified by the current board. Those that can also be passed on to the next board as ideas are where they can start from. The part where we call operating expenses are, what does it cost to run your club? So operating expenses are in a category all themselves. They're not fundraisers, they're not social events, they're like the bottom line. Like, we can't have a club unless we make X amount of money to pay for the services that it takes to run our club. Things like that might be a PO box or printing, taxes for state or federal. Well, you shouldn't have. This is one of those rare examples of where there was taxes that this club had to pay at the state level. You'll have a CPA that you will pay a bill to. You may have a website. You may have a certain event that you do every year, a special reception or something like that that you know you need to set aside money for. For example, here's the kickoff membership drive. This particular club will set aside money for the next year's kickoff drive because they know that they don't make money off of that, but they need money for it. This particular club has a December event that they want to have as a every year thing. They also have a charitable distributions reception that they pay for every year. And then they added, which I think is very wise, administrative request. They went ahead and added that in their operating expenses budget because, you know, there's inevitably going to be something that pops up. So when I look at this club, I know that they have to have $4,850 to stay in existence. So just to operate. So when I come up here and I see, wow, okay, they're fundraisers, that's where they're going to get their money, their dues and their fundraisers. If this club can't make $4,850, they're not going to exist in the future. Now, this particular club is a club that it looks like above and beyond the $4,850 they know they need, anything more than that they earn, they would like to give it away to charity. So once they reach the $4,850 to pay for next year or the existing year, they set aside the rest of the money for giving away to local community. This down here is just a sample of, or I guess a summary of the numbers that are listed above and would be able to tell you your net income. This is just where they, you know, where we list the checking or PayPal balance and how much total cash you might have on hand. Don't be fooled by total cash on hand. Sometimes people look at that number, they're like, oh, we're rolling in the dough. Well, you might be, but you have to consider that for the club to be sustainable, you want to be a good steward to the club, not just the year that you're serving on the board. So you can check your governing docs, but it's always been a best practice in all of the clubs that I've ever been a part of to leave no less than the 1 year's operating expense budget in the bank account for the next year. And if every year the club's board does that, the club should be sustainable. So if this year the board is like, oh man, we have all this money, I think we're gonna give tons away to charity. Well, that's really great, but your club might go out of business the next year. So that's always something to keep an eye on. At the bottom of this, excuse me, I've added a check register, which is kind of the good old fashioned check register. I won't go into that, but that's if your club doesn't use QuickBooks or anything like that. And your club can use a form like this, even if they use QuickBooks as well. Okay. Let's talk a little bit about, oh, how much time do we have? Oh my goodness, we're running out of time. And I'm choking. We talked a little bit about a budget being on there. A budget. I like to talk about that for one quick second, because I've served on a board where they didn't quite understand the budget. When you have your existing board, at the end of the year, they're probably going to be required to set a budget, and they're going to be required to approve a budget. That's just making sure that the treasurer has accounted for everything that has happened and they have forecasted what might happen in the next year. That doesn't mean that they have to designate for each event how much they're going to give to the next board. The next board can come in and look at the previous board's approved budget and make all kinds of fun with it. The next board may want to have totally different events, and that's fine. So my kind of golden rule is to make sure that you really pay attention to your operating expenses. Make sure that you're really making sure that the operating expenses and the cost of those for the following year is left in the bank account, because that's what will keep your club sustainable. Do not get tied up with how much each event will cost, because next year's board may not even do that event. And as a treasurer, you would provide these financial documents each month at the board meeting for approval. So when I talked about checks and balances, there should always be more than just the treasurer review. Well, it's in your governing docs, it's probably required that more than just the treasurer review the financials. So that you have checks and balances and you make sure that all the T's are crossed and I's are dotted. If you do use QuickBooks or some other financial platform, I still use this spreadsheet to relay the information to the board as a treasurer, because it's very easy to walk through event by event. You'll notice that in a lot of counting platforms, they have all the income up at the top of the income statement and all the expenses down at the bottom of the income statement. And so to see what your net was for an event, you would have to match up way up here in income line and way down here in expense line. And it's too much to look at. So I prefer a more focused approach in a one sheet document that kind of spells out how we did with our events and where we're sitting. So maybe it's a one extra step, but I feel like it is definitely a beneficial step. Are there any questions about financials or clubs, spreadsheets, or accounting? And we are really running out of time. My goodness, this hour went fast and I'm losing my voice.
I was going to ask, since we only have a couple minutes left, if you have an extra 10, 15 minutes to hang out to see if anybody does have any questions, that would be awesome. If we have no questions, then we have none, but, please feel free to speak up, anybody, on this meeting. Also, I just had a quick comment to what you just said. I think your spreadsheet is awesome. And the point about tracking particular event income and expenses also becomes important. If you are a larger size club who has to file the full Form 990 for your annual return to the IRS, if you look at that form in the financial section, you have to provide a lot of detailed information tracked by type of expense or income. So for instance, all of your fundraising income and fundraising expenses are separately tracked, and there's a number of other detailed categories. And so, if you're working with a CPA, that person will ask, and they're not going to go through, if they do, they'll charge you a lot of money to do it, but you go through all of your receipts, for instance, and pick out, okay, come back to you and ask, well, what was this? Was this a fundraising event? Was this a social event? Like, what expenses were for this event? And that will drive you crazy as a treasurer and, really raise your bill with the CPA. So if you can track it, as Sasha was saying from the beginning that way, that'll just help you down the line if you, verge over that line to having to file more detailed financials with the IRS or with your state. So does anyone have any questions at all for Sasha on any of these topics or anything treasurer related? Please, raise your hand or jump in. Someone's typing. Brianne. While we wait just a few more seconds, see if anyone has any questions. If you are a member of the council, then we will make this material that Sasha shared available to you. Membership is free for Spouses Club, so it's a very easy process to join with our streamlined application. We also have individual memberships available for a small fee. If you look on our website, then you can get that process started as well. So definitely worthwhile if you're interested in either of those options. If you're not a member, just email me at cfo@councilformsc.org, and I can send you the resources along with a link to become a member. So hopefully that answers your question, Brianne, about the spreadsheet. Okay, we've got a question from, I'm probably going to butcher your name, but Karison. I'm a treasurer for a very small club, so I hope you can answer this. When someone is paying their yearly dues and pays extra for the scholarship fund, would that be considered a donation, or would that stay under the dues and be put to the side for when needed?
I would say that if they're just off the cuff, my answer would be if they're, when they're signing up to be a member, if you have specific membership dues and a very specific, would you like to donate to the scholarship fund? Then yes, that scholarship fund would be considered a donation, whereas their membership dues would be considered income. And you might want to, you know, consider giving them a donation receipt or something for the scholarship fund. I mean, not knowing how your organization is fully set up, that would be what I would think. Because those are two very different things. Does that help? Now, I would also say that, you know, membership dues, if you earn enough in membership dues that goes above and beyond your operating expenses, the amount that goes over and above your operating expenses can always be used for the scholarship fund at the end of the year or whenever the scholarship fund is being calculated. So I wouldn't say that membership dues are completely out of the realm of the club donating to a scholarship fund, but I would say when you're signing up a new member, those are two very different things. So hopefully I'm getting at what you're asking.
I think somebody's typing, but Karison, please let us know if you have any follow-up question for that or need any clarification. Okay, she says, yes, thank you. We can't have our fundraising money be over 35% of our income from dues, so we're trying to figure out where it goes specifically.
Can't have our fundraising money. Okay. Well, I mean, could you just increase your dues a little? That might be what I would say. I mean, but it depends on how your club is structured. Like we're in clubs where I think that, or I've always been in clubs where I think people know that their membership dues are going to help towards operating expenses and charitable donations. So while the membership it's due, my membership dues itself may not be a donation, it doesn't mean that what's left over from the membership's dues can't be used for a charitable contribution.
Sorry, I have my son and he was making a lot of noise, so that's why I was typing. But
No worries.
we just upped our dues from last year, but the issue we are kind of running into is with COVID the past 2 years, our club's been basically non-existent, and it's my first year being a treasurer, so trying to up our dues even more than what we did wasn't really justifiable to the rest of the club, so we could only up it like $10 compared to what it was from the past year. So trying to figure out fundraising events, but not wanting to make it over that 35% of income is what we're trying to make sure we don't do it.
That is a tricky spot. What is the rule for the fundraising money can't be over 35% of your income? Is that a IRS rule?
Yeah.
Yeah,
Okay.
Yeah.
that's for social clubs, if you
Yeah.
have that designation.
Yeah.
Okay. Yeah,
Because
I
we
mean,
wanted to do a fundraising event, but I feel like we would bring in more than that 35% if we did it right away. And then I would just be worried that if for some reason the rest of the year we couldn't bring in more money with dues or something, then we'd be in a tough spot if we started off the bat of the year doing a fundraising event and making over that 35%.
so you really need to have like maybe a targeted, like I might, just because the way my brain thinks, I might write down all of your operating expenses, all of the events you want to do and how much you think they would cost, so that you know how much you need for the year and make that your dues. And then calculate 35% of that as your fundraising goal.
Okay, I like that. That makes it much easier. Thank you.
Like maybe just to have some numbers to start with. I mean, Candace, I mean, I don't know how else I would approach that other than working backwards into it.
Yeah, I mean, the point of it is, right, you've got, as a social club, you're supposed to be taking in most of your income from member dues. So that's why that rule is there. So, I mean, I like what you said, Sasha, in terms of trying to like explicitly budget out, like, okay, you know, this is the amount of money we need, and this is the amount of that income that needs to come from members, and then work backwards to figure out what you can get, you know, in terms of other sources.
That might almost be fun too, because then you can establish like for the year, our goal is to make X amount of money in fundraising. And then you can track that and kind of keep the progress, knowing that you can't go over that.
Okay, thank you. You ladies were a big help. Thank you so much.
And there's also in that link that I posted, I'm just bringing up, if you look at that page, there is a separate PDF document that's linked there that talks about what exactly is non-member income. So usually the IRS tries to make this somewhat regular English. They don't succeed all of the time, but you know, I don't know whether, you know, just a pure donation would, you know, implicate that rule. Seems like it would, but without reading this PDF document about what exactly the IRS says is non-member income, I can't answer it exactly, but that might be something to look into. And as another plug, just for the IRS, they do have, which might be helpful, especially for, you know, kind of clubs that are not as established. They have some nonprofit, you know, tax exempt training videos that are really easily accessible and, you know, could be helpful to understanding some of those requirements too. So that might be something you want to do as a board, is sit down and watch. They're not very long, you know, sit down and watch, you know, a couple of those webinars to, you know, more fully understand all the requirements and everything. But I'm glad, Karison, that you're looking out for those rules. That's great.
Yes, thank you. And you did pronounce my name right, so.
Oh, great. Great. Anybody else have any questions for Sasha? No, going once, going twice. Okay. Thank you so much for attending the webinar today. And Sasha, did you have any closing remarks or closing tips that you wanted to convey?
Just thank you for having me. Thank you to all of the wonderful spouses who are getting out there in their community and stepping up to the plate. I mean, that's what it takes, and doing chats like this is very helpful for everybody. So I appreciate it. I appreciate you being here.
Okay, great. I think Amy, oh, Amy was typing a thank you. So I guess we will wrap this up. And then Tim, if you're still on, if you can stop the recording, that would be amazing.